Namaskar viewers. Today we are going to discuss a very important topic which is in the news that is concerned with basically change in the tax slab and change in the taxation of the debt mutual fund. Today in this video we will try to understand what is mutual fund and what is difference between a mutual fund and debt mutual fund, and what is indexation and what is the reform has been made, and what will be impact of this reform and what will be impact of this on the FD. So let's get into the video. First, you will try to understand that recently, Finance Minister of India introduced a reform and amendment in taxation. In taxation bill, and according to this, that few reforms has been made in your debt mutual fund. So let's first understand what is this debt mutual fund and mutual fund. After that, we will proceed with new and remaining topics. So basically, mutual funds are financial institutions, non-banking financial institutions, which collects money from the common public through issuing their units, and after that, this money they invest in the security market. Security market may be in equity market and in debt securities as well. So this is your mutual fund, and now what is difference between, because basically this tax reform is concerned with your debt mutual fund. So now the question comes to what is difference between your debt mutual fund and mutual fund. So basically this is basically a categorization on the basis of your investment in security, investment in securities. So mutual funds, debt mutual funds are those mutual funds which invest their corpus which they collect from public, which if they invest their less than 35% their corpus collected from public in you, what you can say, in your equity market, in that case they will call it as debt mutual fund. And rests almost 65% of their corpus they will invest in your debt securities. Debt securities means basically bonds. They will buy bonds of the governments, and basically this, if they are investing in the debt securities, it means this investment is more secure. So this is difference between your mutual fund and debt mutual fund. So now we will try to understand what is the tax reform. So before proceeding, we should understand what is this tax gain, long term long term capital gain and short term capital gain. Basically, when you invest money in mutual fund, so if you invest money for 3 years, then it will call your short term capital gain. It means if you withdraw your money before three years, in that case the benefit which you have withdrawn from that investment, in that case that will call your short term capital gain. But if you invest for more than 3 years, like 4 or 5 years, in that case the benefit withdrawn, investment through your investment, it will be called as a long term capital gain. So this is short term capital gain and long term capital gain. Now we will try to understand what is the taxation process, what is the tax slab for this long term capital gain and short term capital gain. So first we will try to understand tax slab in short term capital gain. So before this amendment, there was a provision that if your investment is of 3 years, and if you are getting some benefit from that, so this will be called as your short what you can say, short term capital gains. So here your tax will apply on this short term capital gains on the basis of your marginal tax. Marginal tax basically means on the basis of your income slab rate, income tax rate, in which criteria it comes. For example, this time there are 50%, 30%, 7%. There are different income tax slabs. So in which category which you will fall, so on the basis of that you will be pay tax on your short term capital gain. For example, you are falling in the highest tax category, for like 30% slab in tax slab. So in that case, if for example if you have benefited 1 lakh rupee from your short term capital gain, then you will pay basically 30,000 for your tax. But in case of long-term capital gains. So basically, whole issue is concerned with your long-term capital gain. So we will try to understand what is the provision before and what is will be provision after the amendment. So before this amendment, there was provision for long-term capital gain, that if you will invest for more than 3 years, this will be called your long-term investment, and the benefit which you draw from there, this will call your long-term capital gain. So in that case, before that, there was a 20% tax slab. It means what you will be gain from your long-term investment, you will pay 20% tax with the indexation. So now, through this reform, this 20% tax slab has been reduced. It means this 20% tax slab which was fixed before this has been cancelled out. It means it no longer exists, and this also now falls under your marginal tax rate. Means now your long-term capital gains will also be taxed on your income tax slab. And second thing, I said you earlier that on the basis of indexation, means you also get here the benefit of indexation. This indexation benefit also now withdrawn. So these two amendments has been proposed, and that is your basically concern with your 20% tax slabs will now no more longer this will serve you, and it means now your tax which you will pay on long-term gains will be your income tax rate, and your indexation benefit will also be no more exist. Now let's through an illustration I will make you aware this. For example, you have invested 2 lakh rupee in debt mutual fund. After 5 years, for example, when you withdraw money, and in that case you have earned, for example, you found that your this money which you have invested 2 lakh before 5 years, now it becomes 3 lakh. In that case, your capital gain is 1 lakh rupee. Okay, but what happened earlier before this amendment? Before this, what was the procedure? You will pay 20% tax of 1 lakh, but with indexation. Now we will try to understand what is indexation. Indexation basically means adjustment on the basis of inflation. For example, the inflation has been grown 25%. In that case, for example, inflation that exists before your investment before 5 years grown 25% this time. In that case, your 2 lakh rupee which you have invested before 5 years will also be adjusted on the ground of your inflation, because if inflation has been increased, it means your value of rupee will be decreased. In that case, for example, inflation increased 25%. In that case, 25% of your 2 lakh rupee will be 50,000. It means now your investment will be considered 2 lakh 50,000, not 2 lakh. It means now your investment will be considered 2 lakh 50,000, and you have found your money 3 lakh because after return. So it means you will pay now only tax on 50,000, not on 1 lakh rupee. This is the crux. Before, you have your long-term capital gain is 1 lakh rupee, but with your indexation, when you adjusted your investment with your inflation, in that case you found that this is not 1 lakh, this is 50,000. In that case, you will pay 50,000 as your tax. 50,000 you will be taxable. This 50,000 will be taxable. Now means you will pay 20% on this 50,000. Means you pay simple 10,000 rupee as a tax on this your long-term capital gain. But now what will happen next after this amendment? You will pay on the basis of your income tax slab. Indexation has been completely abolished, and 20% has been abolished, and now it comes in your income tax slab. It means, for example, you come under criteria of 30% income tax slab, and your long-term capital gain is 1 lakh rupee. For example, you invested 2 lakh and found 3 lakh. It means your long-term capital gain is 1 lakh rupee. You will pay your tax on this 1 lakh rupee. No indexation, no 20% reduction at all. It means now you will pay 1 lakh, 30% means 30,000 rupee as your tax. So this is the complete understanding of reforms. Now the question comes, which will it impact your debt mutual fund? Basically, the question is very mixed because experts are saying that it will impact, some are saying this will not impact. So it depends on their understanding pro rata. So basically, if we look, understand, we accept the few more prominent experts, then we will find that this will basically reduce the money for bonds. This will impact bond market to a large extent, and the most important, you should know that this is a very, it is considered a secure investment. In that case, the people, less risky. In that case, people invest in this. But person having higher tax slab, they will be get no much benefit from here. So basically this will impact basically those people who comes in this higher tax slab, higher income tax slab, and it will also impact the persons who are lower tax slabs, but not at such extent, not at that extent. So now the question comes, which will lead to the arbitrage, which will leverage the FD, which will impact the banks. So basically, to a large extent, because the conservative investors will invest in FD, so they will invest in FD. But some investors who earlier invested in your mutual debt mutual fund, in if they will get a less benefit from there, then they will invest in FD because they will find it more secure and most beneficial. So to a tad, we can say that it will increase some investment in FD, but some experts are saying that still some benefit leveraged by these investments in your debt mutual fund will much higher. So this will be still get leverage over your FD. So there are mixed responses. So basically, my aim was to deliver you this reform and changes in your debt mutual fund taxation. So I give you enough information, and please like and subscribe the video. Very very thank you to all.